Welcome again. There is some more details to show what is going to impact the markets in this coming year. First of all, I would like to mention very important chart right now. What you see on the screen is actually that European stocks are currently trading at their lowest valuation relative to US stocks in the history. And that is very, very important point to pay attention to, because most likely in the coming months and also this year can be a good entry point for the European stocks. That's for sure, because what comes down also used to come up, and what is up used to come down. So, and that's the logic in the markets, always have been so. The next thing I would like to mention is also that election year in United States is beginning, and that one I would like to share this chart with you too, as it shows that previously in election years, those first months, January, February, March, have been quite stagnant, and the markets have been moving more sideways than up or down. That means that also we expect this year the same, and it will align quite nicely with the quantitative policy, which means that there is a not yet guaranteed quantitative easing decision into the March. Most likely it will be delayed to the May. And that means that also the markets most likely will be stagnant or decreasing a little bit into the following 2-3 months till April. And also it aligns with the Bitcoin halving, which is coming up in the April. And from there, also the SP 500 plus quantitative easing, that will most likely mean bullish for the markets for the rest of the year. And also we expect to see new all-time highs for the Bitcoin, at least in the November. That's about election effect into the markets, as we see that also there might be definitely growth into the following months after the spring into the SP 500 and all United States stocks. The next thing I would like to also share with you is this, that actually this SP 500 currently is mostly driven by 7 top companies, 7 magnificent companies, which are the main drivers behind this market rally to all-time highs. And that is also that just 7 companies are running SP so high currently, means that this also can be quite a not stable thing, and it can actually crash also down. The next thing I would like to also pay attention to is how to trade stocks, how to scalp stocks in the short term. And there is one great example. For example, recently there was Meta earnings reports coming up, and Meta stock soared 13% after earnings. So into 15 minutes, it comes up by 13%. Why it happened? Because simply the earnings came up with a lot better reading than expected. And those things, if you are in a minute with the data coming up, and you are already well educated regarding the previous data, and you know what to expect, and you know what is the better than expected and what is worse than expected, then also those minutes when those data are coming up are very important and can be very crucial for you to make money in the short term into the scalping into the stock market. And this is one great example how to do it properly. And then also the last thing today I would like to share with you is this chart, what you see currently on the screen. And that is actually US Federal Reserve total assets. Since there is quantitative tightening, it's lost 1.3 trillion. And if we want to go back to the previous levels before the COVID, when actually this huge quantitative easing started with the COVID, then there is still over 3 trillion to be liquidated. And that's probably not going to happen. And most likely we will have a combination with the kind of part of the liquidations. Part of all this gap will be liquidated by the central banks, and the other part will be just inflation into the markets, or in other words, value devaluation for the currency. That's it for now, and see you in the next lesson. In the next time, I will share with you also what kind of cryptocurrencies I'm holding already since the last bull run, and how I expect them to do this time. See you next time. Thank you very much for now.